Hey there, this is Kritesh and welcome to TradeBen's YouTube channel. In this video, we are going to discuss 7 of the common mistakes which options trader beginners make on the day of expiry. Now, first of all, if you're new to this channel, please subscribe. We publish new and interesting videos on investing and trading. So expiries are one of the most important days for options trader. A lot of options trader make a lot of money on expiry because this is the day on which the contracts expire. So the in the money ITM contracts will make you money. On the other hand, OTM, out of the money contracts, will go worthless on this day. So you might see a lot of people sharing their screenshots on YouTube, Telegram, Twitter, and other channels on how much profits they have made on the expiry day. But when I remember my initial days on expiry, I can remember that this was one of the most dreadful days for me. This is because on the day of expiry, the options trader also has a potential to lose a lot of money. This is because the contracts go worthless by the end of the day. And during my initial days, even I made a lot of mistakes while trading in option expiry and lost a lot of money. But I will not want our users, our subscribers to make those mistakes. So in this video, we are going to discuss about 7 of the common mistakes made by the options trader on the day of expiry. So let's get started. First, choosing wrong strike price. The premiums on the day of expiry are little lower because by the end of the day, all the expiries, all the options contracts will expire. So this means that the out of the money OTM contracts will be trading at a very low premium. So let's say the market is trading at 18,200 level and today is the day of expiry. Today you can see that 18,300 call option or 18,400 call options, which are like 100 to 200 points from the current stock price, their premiums will be very low. So you can buy a lot of quantity of these strike prices just because their premium are low. However, you have to also understand that the time decay is very fast on the day of the expiry. And if you are choosing the wrong strike price, in that case, the time is against you. And by the end of the 3:30, if the spot price doesn't crosses the strike prices in the case of the call option, it will become worthless. So even if 18,400 strike price is trading at rupees 3-4, and you might feel that if you buy 100 quantity, you only have to spend 300-400 rupees. But the chances of Nifty going 200 points in a day are very less. So what happens that if you choose the wrong strike price, most of the cases, it will end up to be zero by end of the day. So while trading on expiry days, it is advisable that you trade in the money ITM options, or in the other scenario, best scenario, you can go for the ATM options, but do not trade for OTM options. OTM strike prices are way farther compared to the current price and they will decay a lot faster throughout the day and you will end up losing money. Second, poor risk management. So again, just because the premiums are lower, a lot of traders buy a high quantity of lot sizes on the options during the day of expiry. Let's say the market is trading at 18,200. So on this day, the premium will be lowest compared to all the other days, Wednesday, Tuesday, Friday, all these days. So here you might be able to buy high quantity of lot size of that strike price. And in a lot of scenario, the beginner traders forget about the risk management on the expiry day. So you have to make a rule that you are not going to lose more than 2,000, 3,000 or whatever is your risk appetite in a single day. Generally, it should be less than 2 to 3% of your total margin. So again, the second biggest mistake which the options trader beginners make on the day of the expiry is not following proper risk management. Third, zero to hero trades. So when I first heard about zero to hero trade, it excited me a lot. This is because you can see the screenshots of people where an option of 30 rupees become 300 rupees by the end of the day. So if you have bought 100 quantities of 30 rupees, your investment will be 3,000. But by the end of the day, it can become 30,000 rupees. So 3,000 can become 30,000 on the expiry day if there is a big move in the market and if you have bought the right option trades. However, you have to also understand that most of the time zero to hero trades doesn't work. And the chances of zero to hero trades working on an expiry day is 1:4. That is, out of 4 expiry days, only 1 expiry day will be a directional. And in that day only, you will be able to make a huge profit. On the most of the other trade days, it can be sideways or it doesn't give you big moves. Now, a lot of time you may see that it's already 2 o'clock. And at that time, if you're buying one strike price higher or one strike price lower, you'll be able to buy them at dirt cheap prices. For example, if the market is at 18,200 level, you can buy 18,300 call option at only rupees 3 to 4. So in such scenarios, if the market moves 200 points, then the 3 to 4 rupees premium can become even 80-90 rupees or higher. So if you're doing a good 0 to hero trade on the day of the expiry, it can make you a lot of money. But the problem is that if it doesn't go in your favor, then it will also become zero just in an hour. So only 1 to 2 hours is good enough to decide your fate. You can make a lot of money or you can lose a lot of money. Now the problem comes when the beginners start buying a high quantity of those 0 to hero trades. For example, it's trading at 3 rupees and you buy 1,000 quantities of that contract. So you might see that if you are investing 3,000, it can become 30,000. But if it doesn't go in your favor, you will also end up losing 3,000 rupees, because just in 2 hours, by the end of the 3:30, when the trade closes, it will expire worthless. Its price will become zero. So another mistake what beginners make is 0 to hero trades. You only have to take small quantity of 0 to hero trades. And further, it will be better if you only trade the part of your profit, the profit that you have made by trading, into the 0 to hero trade and not trade in a high quantity. So this is another mistake which I used to make. I remember the times I have bought even 2,000 quantities of 0 to hero trade, and I ended up losing all that money because the market didn't move in the next 1 to 2 hours. So try to avoid making this mistake. You can try 0 to hero trade, make a small lot, 1 lot, 2 lot, 3 lot, but do not go high quantity when you are doing 0 to hero trades. The fourth mistake which options trader make on the day of the expiry is gut based investing. They trade just because of their gut, and it can be very dangerous on the day of expiry. So in most of the cases, if you know that the trade is not going in your favor, when you know that trade is not going as according to your plan, in that scenario, you just cut your losses and book some profit. However, in the day of expiry, let's say you have bought a premium at rupees 50 and it has went in wrong direction and it has decreased to rupees 30. In that scenario, a lot of time, the new options trader do not book their profit. They feel that only 30 rupees is there, what they can lose, and they just go with their gut. However, if your gut is wrong, if all the technicals, if all the chart is saying that it is going to decline further, then even that 30 rupees will become zero by end of that day. So an important thing while doing trading on expiry is to avoid gut based investing. No matter what your gut says, whether it's going to go up or go down, you have to remember that theta or time is moving against you on the day of the expiry. And in that cases, if you can see that the technicals are not working in your favor, avoid gut based investing and look into the technicals and book your loss. Fifth, revenge trading. So another mistake that options trader make on the day of expiry is revenge trading. So now I remember that during my initial days, on the day of expiry was the day when I do a lot of trades. So the number of trades on that days used to go even 40 to 50. So the thing is that every week you try to wait for the expiry day, and you know that on this day you have a huge potential to make money. However, let's say that you lost 5,000 rupees on that day. So most of the beginners are not able to accept that they lost 5,000 rupees and they start over trading on that day. They try to recover that money and they start taking revenge trades against the market. And generally it ends up in them losing even more money. Initially, if they have lost rupees 5,000, by the end of the day, they can even lose 10,000 rupees. In general, we can see that revenge trading is highest on the day of expiry. Now, this is a big mistake because everyone knows that when you are trading in stock market, a lot of things are not in your control. So if the market is not good or if the day is not good, in that day, no matter how good trader you are, you will not be able to make money. In that scenario, it will be best just to stop trading and not to go against the market and not to start over trading. However, this is not the scenario with the case of most of the beginners. They start doing revenge trading and they end up losing more money on the day of expiry. Now let's move forward to look into the sixth mistake which most of the options trader beginners make on the day of the expiry, and it is lack of patience. So no matter if you have bought or sold on the day of expiry or if you have taken any trades, you will require patience. It's very rare that the market will give you a very good returns in 15 to 30 minutes. And even on the day of the expiry, you have to be patient. Whether you have made a straddle, strangle, anything, you have to give your trades time so that it can give profit to you. Nevertheless, the traders are the least patient on the day of expiry. So let's say the market is not moving and you have bought a call position. In that scenario, just because you know that the theta is working against you, you know that the time decay is working the highest on the day of expiry, you will lose patience and you will cut your positions too early. Similarly, let's say if you have made a strangle, you have sold two strike prices. So the sellers can make a lot of money on the day of expiry, because if their view is right, all the premium will become zero by the end of the day and they will end up eating all the premium. However, this also requires patience. You need to have patience to hold your positions for a longer time in order to make profit. So for both buyers and seller, patience is a very important thing even on the day of expiry, which the newbie investors do not have. And let's finally look into the seventh mistake that options trader beginners make on the day of expiry, and it is getting confused between options buying and options selling. So on the expiry, you have to look into different strategies to make money. So if the market is directional, if it's a trending market, in that case, if you are doing option buying, you will be able to make a very good money. On the other hand, if it's a sideways market, if prices are not moving forward, in that case, if you are making a strangle or if you are just selling some strike prices, you can make good money on the day of expiry. Nonetheless, you have to choose your strategy properly. You have to not get confused whether you should buy or you should sell on the day of expiry. You have to understand the direction of the market, whether it's directional or non-directional. And this is again one of the biggest mistake which the beginners make. They are not able to understand whether it's going to be a directional market or it's going to be a sideways market, and they end up choosing the wrong strategy on the day of expiry. So here, only with experience you will be able to understand the direction and understand the strategy which can be used properly on the day of expiry. But this is the mistake which most of the beginners make, and that's why they lose money on the day of expiry. So that is all for this video. I hope you have understood all the mistakes that the beginners make on the day of the expiry. Another important factor or point that you need to understand, that you do not need to take the expiry day as the last day of your trading. Expiries will come every week, every month. Even if you have not made any profit on this expiry, the market will give opportunity to you on next Thursday or the month after that, or even the next year. So you will just need to have patience, continue doing what you are doing and keep learning about options trading, and the expiries will come when you will make a lot of money. In addition, we are also organizing a special seminar in Bangalore on options expiry, where we are going to discuss about different strategies that you can use to learn how to trade and make money on the expiry day. So if you are in Bangalore on 14th May and if you want to join our seminar, we will add the link in the description. You can use that link to join us. So on this event, our special host will be CA Manish Singh, who has over 15 years of experience of trading in options. In addition, I will be also there, and the head of research, Hitesh Singhi at Fingrad, he will also join that event. So if you want to learn how to make trades on expiry or how to become profitable on expiry day, you can join us in this event. And I hope we will see you soon in the event. Thank you for watching. If you like the video, please hit the like button and subscribe us for more interesting trading and investing videos. This is Kritesh signing off.